Hi everyone, this is Jason Burek of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a first-time guest. He's joining us from Switzerland. He's managing director at Global Gold, which is a firm I think that's been around since the 1990s, and it stores physical gold outside of the financial system. It's allocated gold, so it's not unallocated, and it's got problems with. It's not one of those. So thank you for joining us, Claudio Graf.
Hey Jason, good to have you on the phone. Thank you for the invitation.
Now, Claudia, let's talk about the ECB. The ECB, it just really in the last 6 to 8 months, there's been just so many stories out. You have the Swiss depegging. You have the European Central Bank announcing its quantitative easing program and violating its mandate. Do you think the euro could potentially collapse then with either Greece leaving or Germany leaving in the near future?
Well, I think at the end of the day, it's always people perception. And, when we look at the people perception today, I think most of the people are not aware in what kind of shambles, crucial situation we are in. So I think, the Swiss that they depacked basically, or that they killed that floor to the euro was when because they knew, that drug is going to increase liquidity by 1 trillion, and they knew that they cannot keep that floor. Because otherwise they would have, within a year they might have doubled the balance of the Swiss National Bank to 1 trillion. At the moment it's 500 billion, and 10 years. At the end of the 90s we stood at 50 billion, and then 2008 100 billion, and since 2008 basically they went up to 500, and so it was impossible to keep that floor. And yeah, of course, the eurozone. They need. They buying off the assets of the balance sheets of the banks, and they hope by doing this that they can increase the liquidity, that the banks are going to lean more money to the real economy. But I think that's not going to work. At least that's what they also have tried in the past. But today everything is. I think the big market is everything is in the financial markets, and we can see that the real economy is basically going down the drain. So you can buy some time by printing additional money out of thin air. And propping up the markets, at least, if the markets would crash, then everything is over. So I think that's why they are so much interested that the asset bubbles are going up, fueled by paper money, with an intrinsic value of zero.
Yeah, this is a problem. This is a debt problem and problem with debt-based fiat currencies. But in terms of the actual in terms of the Europe, do you think then that we're going to see more of the other European currency pegs that are like Euro pegs? You think we're going to see those come off too in the near future?
The euro. Which pegs do you mean by exactly?
Well, I think the Dutch. Isn't it Sweden or the Dutch are still pegged to the euro? Or there's a few more other pegs, European countries that are not technically in the Eurozone, but they're pegged to the euro. Well, so I don't think they've unpegged yet, but they'll probably follow Switzerland sometime in the near future.
Yeah, you have Denmark and so on, basically reducing Sweden, reducing or implementing also negative interest rates. So of course, they all in a way try to, to debase their currency, because they still believe in this. It's bullshit basically that by depreciating the currency that you make a country rich, or that you can make a country maybe more competitive in export by depreciating the currency, but at the same time somebody has to pay for it, and that's all the people which are living in that country. When you print more money and you take down the value of the currency, all the rest of the people, they are basically paying for that. So it's it can help for a short period of time, but it does not change anything at all. It has a negative impact also for the export industry, because they don't have them to adapt their structures. And I think what we really would need, also over here in Switzerland, is we need deflation, but we need deflation in asset prices. We need that the countries are going, reducing the amount of people working for the government. We need more people in production, and so we need to have, a strong currency is fantastic, because, at the same time people can buy much more. So, even here in Switzerland, if the Swiss franc would go up, of course, it would mean that everyone which is indebted would go bankrupt. But I think that's basically what we would need, because it will happen in the future anyway, because it's impossible to print wealth out of nothing. If this would work, then the central bank can directly hand us, every citizen, 1 million Swiss francs a year, and we don't have to work, and we can live a happy life. But we all know that this is not possible. But at the same time, central banks are doing exactly this and trying to explain that it's possible.
Yeah, I think, Claudio, they're trying to, instead of crash now, they're trying to postpone the crash of asset prices or their banks, et cetera, as long as possible, and they don't care about the long-term consequences, which is one of the problems of Keynesian economics. But that's a great point you brought up, though, about printing money doesn't lead to prosperity. I mean, look at what John Law did. How is what Keynesian economics that much different than what John Law did, with the Mississippi bubble or some of these other bubbles we've seen throughout history? It's really not that much different. But yet the majority of people, I think, that are running things, the central planners, the people on Wall Street who, care about their, need asset price inflation this month or next quarter, they only care about the short term, so they can, beat their benchmark and get their big, large 6, 7, or 8 figure bonus, and they really don't care about the long-term ramifications of, the consequences of this central planning policies.
Yeah, I know a lot of people which basically they understand that something is wrong, and they also believe that it's crazy that all these central banks are printing money, but at the same time, they are just frightened, they are just scared. They don't want to think about the outcome of such a situation, because they are 60 or so they have a mortgage on their house. They paid into the pension fund. They are looking for this retirement money paid from the government and so on. So they just live in this illusion that this might go on forever, and they don't want to think about the logical consequences of that, because they are just they're just scared, to get, to figure out what really is coming. So you have both. Of course, you have certain people, they definitely understand the system. They also, they are part of the banking and the central planners business. So some of them, they know exactly what they're doing, but a lot of people, they have no clue, because they never read history. They never, read, different economical books and theories. And they even haven't thought, a logical process through what we are going through right now. They never really came up with their independent mind how to judge a situation like this, if it's possible, if it's not possible. I think that's the big mistake of our today's time, because we in the Western world, we are just, as long as we consume, people are happy. So.
Yeah, a lot of people in the Western world, like you said, Claudio, are complacent. They like the status quo.
Sure.
They're kind of used to it. It's very, as a human being, most human beings don't do well with change. They don't embrace change. But we're hearing rumors in Greece of potential bank runs and flight capital and capital control. I think you're telling me before the interview that your firm hasn't really seen enormous amounts of Greek clients, come to you saying, I have to put $100,000 or more of my own money, get it out now into gold. We haven't quite seen that yet, maybe, but it's probably coming down the pike here, depending upon what happens with Greece, and it could potentially happen in other European countries, because Italy and Portugal, the PIGS countries, they're really not that much better than Greece, and we've heard, I think everyone's heard the story now, if you pay attention to markets, of how Italy agrees with, what kind of Greece is trying to do with holding out, demanding better terms, but that they publicly can't agree to it, but they, behind closed doors, they agree with everything what the Greek government is doing.
Yeah, I think, Greece will be really a good example, and I really don't know. I think it's, the chances are 50-50, let's say 40-60, that Greece is leaving the Eurozone. What would happen if Greece would leave? Basically, it would be good for the euro in general. So it might have the impact that the euro is going to appreciate again. And I think that's exactly not what the European leaders are looking for, the ECB bankers and so on. So I think maybe they're going to find kind of solution, kind of agreement that they might stay in, because as you said, and at the same time they cannot. The haircuts, are basically to reduce the amount of debts. I don't know if they can do it because, as you said, then you might have Italy, and France and, Spain and so on, basically looking for the same. So I really don't know. I still believe the best for the Greek people would be to leave the Eurozone, to take the hit. They're already in shambles. Of course, they are scared to death that what would happen if they get kicked out of the euro or would leave the euro, because most of the Greeks, they still want to have the euro. So but at the end of the day, that would be really the best for them. They would have to go through maybe 1-2 years transition period, hard deflation, collapse basically, but then they could rebuild everything from scratch. And right now, if they stay in the euro, they're just going to be more and more impoverished. So.
Yeah, Claudio, I don't think anyone knows, and I really don't think, these European central planners, these technocrats and bureaucrats, either at the European Central Bank or in Brussels, I don't think any of them have any idea what they're doing, or at least most of them don't, and yet, they pretend in public like they know what they're doing to try to prevent panic, but they really have no clue what they're doing.
Yeah, you might be right,
Okay. Well, let's move on to the next topic. You live in Switzerland. The Swiss gold referendum was defeated. There was a lot of people in the gold community who thought it would pass. Why do you think it was defeated?
Well, at the end of the day, we can also bring it down to that the Swiss also like the status quo, and they also don't like too much change, and they don't like, uncertainty. And because Switzerland, is still doing fine, and when we had this initiative with gold coming up, basically at the beginning we not even had discussion or a debate about the gold initiative, and so we were able to raise a debate over here, and then when the first polls came out, that 45% of the people were in favor of the gold initiative, then the whole propaganda campaign really started. You could hardly see, I think 98% of all the articles in the newspapers, TV shows, was against gold and was against the gold initiative. And
you noticed a big spike once the polls announced that the anti-gold people were losing. So the spike in these anti-gold articles and TV shows, they increased dramatically?
Absolutely. Yeah, because they were really, that was a real shock for them. Because then they also had, then they had to go into the debate and to start, bringing up the topic, because they realized, hey, people are talking about this time about gold, and they think about gold. So we have to convince them that it's wrong. So we even had, the president of our national bank holding public speeches, which he never does. And, we had bankers, we had private bankers, we had, we had politicians, of course, we had all the political leaders, which were against the gold initiative. So it was a huge, it was really, everyone thought, okay, everyone that is pro-gold must be a completely crazy guy. And so that was then done until the vote took place, and then it was defeated completely. So.
Yeah, once the in my personal opinion, I wasn't closely following the story, every day, but I was checking articles, every few days. Once I saw that the donations were shut down, where foreigners couldn't help donate, for the awareness to the campaign, for the pro gold part of the initiative. Once I saw that, I was like, this has almost no hope of passing. They shut down the money, which is kind of, the first thing that the central planners and the people in governments do, whether it's Julian Assange at WikiLeaks or Edward Snowden or other whistleblowers and things like that. When there's a really important key initiative or a whistleblower or something that needs funding, they go after it and shut it down. So I noticed that, once that happened, I think the odds of it passing at that point in time were low. But I think eventually, these almost all these countries, what we're seeing in the East, and you talked about this before we started recording, is we're starting to kind of see a de facto gold standard anyway, where Russia and China, India, many Middle East, many of these developing countries, they're not on a gold standard. They're not fully backing their currency by gold, but they're putting most of their trade surplus reserves into physical gold now.
Absolutely. This is not something brand new. We can witness this process over a longer period already. And it started 20 years ago. So first it came from the States to Europe, and from Europe now further to the East. So, but I think this really tells me, I believe the people in the Western world, they don't understand that gold is money, and they really they only believe in paper money. You know, they have no real relation to physical gold. They don't have a clue about the monetary system, or how money came into existence, because they have never been taught like this. You know, they don't even know history, for example. A lot of people, you know, I mean, we have been raised in government sponsored schools since childhood, and what you learn there basically is how to become a good servant of the state. And but you don't learn really, you know, what in my point of view would be extremely interesting and important. And I think we need to understand where we are coming from, you know, our culture.
I agree.
History.
That is such a great point there about government-sponsored schools. They don't teach entrepreneurship in the schools.
No.
They don't teach accounting or how to balance a checkbook at a young age. I mean, little kids should be learning about entrepreneurship so they can, you know, create value throughout the economy and create jobs and things like that. And, you know, even if they don't like it, maybe they tried it out for a little bit to see if they like it or not. They should be learning Austrian school economics. That's something I founded my business on. Sorry to go off there on a little tangent there, but, you know, that's kind of the reason why I founded Wall Street for Main Street, an investor education company, is I want to help solve that problem that I think is there, where people can learn these valuable skills starting at a younger age, more efficiently and at a good price.
Absolutely. No, I mean, you know, that's good stuff about the internet. I mean, the internet is really the game changer. I mean, the internet is the Gutenberg press. And today, when you think about it, I mean, when a child is interested, you know, he really has all the knowledge of the world at his fingerprint, because he can Google it, you know, he can go on the internet, he can search, he can read from different and learn from different sources, and he can come up with his own point of view based on, you know, what he has read from different sources and compared and so on. So I think, you know, and the internet is free. I mean, it's anarchistic, so you know, governments will not be able to stop the internet, censorize the internet. So
well, hopefully not, but they're collecting all of our data, which is really creepy, Claudio. All my text messages and photos, like, you know, the NSA is like scanning my has all my photos uploaded from Google and Facebook and things like that into their facial recognition database, and I think other government agencies too. So yeah, I get that our information can be shared freely, but I don't like, you know, how they're storing it and tracking it, you know, without any just cause. I actually, over this past weekend, to go off on another tangent, Edward Snowden spoke via Google Hangout. He spoke for about 25 or 30 minutes. I was at a very large libertarian conference in D.C. talking about exactly what you just said, how, you know, they're violating the Fourth Amendment of the United States Constitution, search and seizure over our data. We don't have any say as Americans, you know. They're going right after our property. He says our data is our property, it's not the government's property, and they have no right to do it without our permission.
Absolutely. Absolutely.
Now, since you're in Switzerland, I want to get your opinion here about this for the gold refiners. Have you visited a Swiss gold refiner recently, and have you talked to any of them about their ability to source physical gold supply? And you know, I've read from other articles and spoken with other contacts at Swiss gold refiners. A lot of them are running pretty much 24/7, 365. In order to convert either old coins or old gold bars into, you know, 4 9s, I think, 1 kilogram bars for China and Asia and the Middle East. Is this what you're also seeing and hearing?
Yeah, absolutely. I mean, that's really the general picture. You know, the refiners. I mean, I think it was 6 months ago not less. I mean, let's say autumn. I mean, the summer was a bit quiet, and then basically afterwards, you know, China picked up again. Swiss refiners were working 24 hours, 7 days, and they were also telling me at that time that they have that they are scared because of supply, because minings are shutting down. You had less scrap gold being turned in, so they were a bit worried that they might face a supply issue in the future. And I think still this is something which it will happen sometime in the future. We don't know exactly when, but so that's something that I'm also closely monitoring over here in Switzerland at the moment. I think it's okay, but I also expect that once, I think even this year, you know, by the end of the year, I think gold will be much higher, and so that might become a problem in the future. I know that China has just recently. I had a guy on the phone from the refinery. I communicate with them on a regular basis. So he told me that China has slowed down a bit, but there are still, demand is very strong. And now, of course, everyone is waiting for India, which is coming up with a decision end of the new budget end of this month, also end of February. So the people are expecting that they are going to lower the import taxes on gold. At the same time, they had this all closed 20-80% scheme, so that people were able, banks were able to import 80%, but only if they were able to export 20%. So it was a limiting of the market. And so that clause has been gone as well. And at the same time, they were also not allowed to give gold loans out. They also said it's impossible. They did that in 2013. So that has also now changed. So India is definitely picking up again, and it will be interesting to see end of this month what will happen to import taxes. But I think it's good. We always have, you have India, then you have China, then you have Russia, then you have some countries in the Middle East, then you have some other nations in Central Asia. So I prefer when physical gold basically is being distributed into certain countries, different countries, and not only going into one country. So we need more distribution of physical gold, and I think that just shows that, the demand is strong. Even if one country is slowing down for a certain while because they also have internally, financial troubles and so on, then basically another one is picking up. So I think so I'm very positive.
Yeah, Russia is still putting, I think, almost 100% of their trade surplus dollars, even though the oil prices dropped a lot. I think they're still putting a massive amount of their monthly surplus money into physical gold. China may be slowing down. Obviously, look at the base metal prices. But even despite that, I don't know if you pay attention to Kuz Jensen's numbers over at Bullion Star, but the Shanghai Gold Exchange withdrawals, I think they're still on pace to pull in about 2,000 tons, import 2,000 tons of physical gold from other countries into China. At least that's what the Shanghai Gold Exchange says. And that's basically 100% of the annual primary gold mining supply each year. And I think in 2013 and 2014, China imported over 100% all by itself of the annual physical gold supply, which is way higher than the numbers the World Gold Council and CPM Group and these other investment banks and gold research firms that are mainstream ones on Wall Street that they're saying. So I think the mainstream Wall Street investment banks and the World Gold Council, I don't think they understand what you just said, that the demand out of Asia, out of China, India, etc., is still extremely robust. That maybe it slowed down a little bit, but compared to even 5, 6, 7, 8 years ago, it's still extremely strong.
Absolutely.
Now, it seems to me that the Western investor, and you said this, and I think this is very important. The West doesn't understand gold as money. I actually just submitted an article for Gainesville Coins. They asked me to talk about the gold market and send them over a short piece on it, and that's something I mentioned as well. I said, most of the Western investors now, Claudio, they don't know Austrian school economics. Most of them lack the patience, to be a good value investor or a contrarian. There's just not as many of them as there used to be, say, a few decades ago. Most of the investors now in the West are, technical analysts. They look at a chart. They're trend traders. If something's not an uptrend on a chart or their technical indicators, aren't flashing bullish momentum, right, they don't buy it. So even if, it's way below, like in the case of gold and silver, where, the primary silver miners are losing $4 or $5 an ounce for every ounce of silver they produce, or for gold miners, some of these primary gold miners are losing over $100 an ounce for every ounce of gold, and that's clearly not sustainable in the long term. They don't do the type of research where they'll buy something like that because the chart's not good.
Yeah. Hey, today, really, everything is in the financial markets. The financial market, I even know a company based out of Singapore, they're also in steel trading, for example. They make 800 million turnover on a monthly basis without moving any steel. They are just hatched, and they are just playing around in the financial markets. And,
just derivatives trading. So they say they're a steel trading or something, and they don't actually have any steel.
At least they have some, and they're also involved in commodities. But at the end of the day, that's not where they make the money, because as we can see, the real economy is really going down everywhere. That's for years already. So,
yeah, I agree.
and at the same time, we can see, okay, when you print more
There's-
money, inject liquidity, then you can prop up certain markets. And today that just shows, the economy has nothing to do with the real economy anymore. It's really only financial markets. And it's a big game. It's really like Monopoly on a wider scale.
Casino.
Casino, yeah, absolutely. So of course, these guys, they look at their charts and which is going back, I don't know, a few years, and yeah, they will never expect the black swan, and the next black swan basically is coming, but that's not popping up in their statistic figures.
Exactly, Claudio. Their models are flawed, and that's the problem with Keynesian economics and so many of these other, bad theories out of finance and economics in the mainstream. But it's just like you said, black swans. We're seeing so many of them pop up. The oil price crashed. I don't think there was really more than a few experts at all who saw the oil price crashing that quickly. Especially when you look at the supply-demand fundamentals, and then, we see the Swiss depegging. I think there was a number of hedge funds, right, leveraged currency trading hedge funds who went bankrupt in a matter of days, which is just ridiculous. And then, we're seeing other potential black swans down the line in Europe and Japan and things like that. So it's just like, it's amazing that these guys who are managing so much money, right? They lose a lot of money. They may make a lot of money in a short amount of time, but then they don't account for any of the downside risk. They don't have any insurance in their portfolio, either physical gold or hedging downside risk. And then they blow up their firm, and then they say, well, no one saw this coming, but anyone with common sense saw that this was a possibility.
Sure. That's the problem with the centralized system. At the beginning, when everything is based on credit, or you just start with, adding more credit into the system. As we discussed before, when you look at the United States, the funded liabilities, this 18 trillion, 99% of them were built up since 1971. And then the same goes then also unfunded liabilities, which are today, I think, 220 trillion as per Kotlikov from Boston University. So, it's just gigantic. And then, of course, at the beginning, when you start handing out credit, everyone in the Western world was profiting from it. And the stuff goes up, like when you are, as a private individual, get some more money, you can consume more, and so on. It can go on for a certain while until you are over-indebted. And I think that's exactly where we are for a long time already. And that's why we see only negative interest rates. And that's why we see that more and more people losing in that game. And that's why we also can see that we are being impoverished. For 10 years, 15 years ago, since then it's really going down. And that's so now I think we're really in the end game. I don't know how long it might take, until the whole system will blow up. But I think the next 5-6 years, I just believe that that the middle class is going to be impoverished completely. And then we really have, that's because a centralized system is also, before it's dying, it's centralizing up. So, at the end of the day, you will have the too big to fail institution, which will always be bailed out, but the rest of the people basically are going to lose, during correction phases, what they thought is their wealth, their artificial paper wealth.
Yeah, I agree. They've definitely kept this game going a lot longer than I thought possible initially. I was looking at debt to GDP ratio, but I think that's the wrong equation to look at. I think we have to look at Japan, who's been doing this longer than anyone else. I think they don't care about the principal on the debt. They know they can never pay that back, whether that goes for Japan or the U.S. or any other country, increasing their debts exponentially, like you said. I think it's about, can they still maintain the interest payments by artificially manipulating the interest rates down with financial repression? How much longer will the markets and people and governments and their trading partners of governments doing financial repression go for this before they say enough? So, that's a question that I don't know if anyone can answer properly right now, but I think Japan's the furthest down the road here because, they've been doing this longer than pretty much anyone else, and they can barely make the interest payments now, with interest rates near zero and their debt's just exploding. So I think Japan, out of the developed world, will probably be the first one to experience this either debt restructuring or currency crisis or something like that. Although, the U.S. is amount of debt is just more massive. But that's something we could discuss on the next interview. But I think the bottom for gold, if it's not already happened, for this artificial bear market that's happened, over the last 3.5, 4 years, I think we're basically coming out of the bear market now. We're seeing signs of, acquisitions in the miners, that the larger miners are starting to gobble up the good juniors with good assets and stuff like that. We've seen the cost cut. And I think the demand, which a lot of people in the West predicted would collapse, out of the East for gold, and it still looks strong. So I think these are all signs that the bottom in the market for gold and silver, if it hasn't already happened, it's very close. And, I don't expect that we're going to see $2,000 gold, in 6 months or anything like that. But, it's just good that this is a natural, healthy, that the market's putting in a bottom.
Absolutely. I had some conversations with these guys who never invested in gold, for example, but you were buying, bonds, government bonds. And now, when you can see how many government bonds are in the negative territory, this means, when you have, let's say, $1 million available and you invest it for a year, you know exactly that in 1 year you will get less than $1 million back. That's promised. And so now these guys are even thinking about, now they are saying, hey, okay, this gold, I have to pay an insurance, maybe some storage fees. But at the same time, I have an upside potential, which is quite big. And if I look at it as kind, I'm saving, for a certain period of time. It really is my hedge, and it's my monetary insurance. So I think now we might see, in the coming weeks and months, even investors in the Western world, which used to deal in paper assets, which might, because of negative interest rates and all that stuff, change and switch also to physical gold for the first time. So I think that might be a fair scenario.
Yeah, I think these are all signs, things being put in the bottom, that the sentiment levels for gold and silver and the mining stocks have just gotten so negative the last 2 years.
Yep.
I think they were measured by Sentiment Trader, I wrote this in an article, they were at basically zero, which is an all-time low, that there was no money manager on Wall Street who was polled in this, or hedge fund manager who was bullish gold or silver. So that, as a contrarian, as a value investor, is a really good sign that the bottom, maybe it wasn't going to happen immediately, but that it was very close. Well, Claudio, I just want to thank you very much for your time. Please tell our listeners more about your company, Global Gold, and what you guys do for storing physical gold.
Okay, first of all, we are based out in Switzerland, and we are operating on the Swiss jurisdiction. I think that's a key element, because it's today I still consider Switzerland as the safest jurisdiction because of our decentralized political system. And we don't have a president, and our politicians, they don't have that much power as politicians surrounding us. And at the same time, we are the last remaining direct democracy left on this planet. So, people can always decide if the government comes up with a suggestion or whatever, people can say yes or no if they want to. So that protects, property rights in the best possible way. And then, of course, we are extremely conservative. So this means people can buy they can buy, store, sell, deliver physical gold in the form of their choice. So we don't, as a company, we don't take any risk. We don't hedge. We don't pre-finance. We don't have our own stock. We really act and act on behalf of the client, because the metals are always under his direct and unencumbered ownership. So the metals are not on our balance sheet. They're not on the balance sheet of the private storage facility where we are. It's AAA, high security storage facility where we basically store the metals on behalf of the clients. So I think it's all in all, it's one of it's a real harsh crisis scenario solution. And what we try is to offer all these little details which will make a big difference in a harsh crisis scenario. That's what we're doing.
And you guys accept American citizens as clients still? Do you guys have to deal with FACTA yet, a Foreign Accounts Tax Compliance Act, or?
Well, we still accept American clients. That's not a problem. I always tell the people, listen, if you decide to move outside the banking system and you move into physical gold, make sure, the biggest threat are bankrupt governments in the future. And so, when it comes to American clients, if they have a bank account in the United States, they live in the United States, they basically can buy, they can wire the funds to us and they can buy gold. If I have an American client which has an offshore account, for example, then I ask for an FBAR, because I want to have that the people are compliant with their law, because that might backfire otherwise in the future. And I really try to avoid that. I want to protect Global Gold as a company, but I also want to protect my clients, that I have, those clients on board which are not trying to hide something, but those clients which really believe, in the same values and in pursuit of happiness, and that, and also, of course, in physical. I mean, all the values basically gold is representing: sound money for a sound society.
Yeah, I agree. I think gold is a great way for savings and for insurance, but it seems the federal government, and there's a new we can talk about this maybe on the next interview. There's something called Operation Choke Point out, where the U.S. government is now kind of going after some local coin dealers here in the U.S. For compliance stuff, but I mean they've been kind of making it harder for U.S. citizens to own and operate, foreign bank accounts, running their businesses through foreign bank accounts, and there's a lot of foreign banks who don't want to have U.S. citizens as clients anymore. So I was just wondering if you ran into that yet, or if you're technically not a bank account. But
we are not considered as a bank account, because we don't act like a bank. We really do. We buy on behalf of clients, or we sell on behalf of clients, and we don't, as I said, we don't pre-finance. We don't offer paper gold, stuff like this. It's 100% purely allocated, and we have different storage solutions, from standard allocated storage to fully segregated storage, and therefore we have a kind of special status.
Okay, very good. Well, thank you for your time, Claudio, and when there's more news about Europe, I'd like to have you back on to talk about the European markets and also physical gold demand from Europeans.
Okay, fantastic. Thank you very much, Jason.